Okay, today we're going to be talking about a trade recap in PFE, that's Pfizer, and I'm going to call this When You Were Right, But Your Timing Was Wrong.
This is the How to Trade Stocks and Options podcast brought to you by 10MinuteStockTrader.com, where we give you the tools, tips, and tricks to help you trade faster and trade smarter. And here's your host, voted one of the top 100 people in finance by Redwood Media Group, founder and head trader of 10MinuteStockTrader.com, Christopher Uhl. The How to Trade Stocks and Options podcast is produced in partnership with my friends at FinClub.ai. I use the artificial intelligence data from FinClub as my primary indicator. I don't even take a trade if FinClub doesn't show me that I have a greater edge than any other traders in the market. You've heard the stats, 90% of traders fail, which is why you need to find an edge, and FinClub has that edge for you for just a few dollars a day. The returns produced by FinClub have been shown to be more than double that of the market, with win rates as high as 90%. I mean, they basically make it so easy. They're going to show you exactly what stock is going to exactly what price. Basically, they're handing everything you need to you on a silver platter. Listen, they are so confident that this will change the way you trade. FinClub.ai is going to give you 2 full weeks to test drive their service, and they'll even give you all their historical results so you can see exactly how it works and how it can dramatically change the way you trade. And that's exactly what I've done. So head on over to FinClub.ai to start your free 2-week trial, and I'll even throw in some extra bonuses after you sign up. Now, the only place you can get your discounts and free bonuses is at FinClub.ai. That's FinClub.ai.
So we purchased long 39 puts. They were in the money and they expired on February 21st. Purchased them on February 10th for $1.32 each when PFE was at $37.77. We sold them the next day for $1.05 when PFE was at $38.03, right? So it was a loss, and it was a loss of 20% on the option when the stock increased only 69 basis points. Now, obviously, that's not something that we enjoy doing, but losses are a part of the game. And I'm going to show you exactly what happened. And like I said, we were totally right. We were just wrong in timing. FinClub had a 49% strength rating on healthcare at that time, and our daily and our hourly charts both had confluence with 520 crossovers, MACD crossovers, and our RSIs look good as well. So let's move the handout out of the way, and let's talk about the trade, right? So I am going to show you where I went wrong on this trade. Remove. Okay. So what I like to do sometimes, I just like to clean everything up and just show the moving averages and absolutely nothing else, because that shows a lot easier what's happening. As you can see, Pfizer had a pretty big decline and then a rise, and then it started to fall again. And we got in the middle of this, and we didn't get a good entry. We didn't get a great exit, but we did okay. I mean, it could have been a lot worse. The main thing to know about with this trade is that we defined our risk ahead of time. We had our stops in, and our stops got hit, and we moved on. So you can see the blue cloud. That's where things should have gone. And one thing that can happen whenever you're trading trends is that it may be bouncing within a range before it comes out of the trend. And in this case, it had gone down, bounced up a little bit, and then fell through and continued the trend. So what happens is that you, or at least I, like to define a level that I say, okay, if it goes below here, then things are not going well for the stock. And to me, that shows the beginning of a trend. So I set my alert line at 37.75, showing right here. And that was at the bottom of these candles here. And so I purchased it when I purchased the put, which grow in value as the price of the stock goes down. I purchased the put basically at the bottom of that day, which is not where you want it to be. And where I went wrong was right down at the volume, okay? So it was going down, moving down, but there was just not a lot of volume going on. And I should have seen that, and because I didn't see that, that cost me this trade, right? Things are going down, volume is light. Even on the 12-minute chart, you can see volume is well below the average volume there as it's going down. And then lo and behold, we bought the bottom and immediately reversed, and it hit our stop just a couple hours later, and we were out. You know what? That's totally fine. And it happens. And while, yeah, of course, I would have loved to have been in it when it like fell off the cliff a few hours after that. I had set my risk tolerance and I had set my stops in the market. So I didn't have to worry about anything. The stops get hit, I'm out. I'm on with my life. But where I could have done better was watching the volume. The volume did not confirm this trend was down. However, if you look at it when the volume did start to pick up, when the trend did start to pull down, you can see the volume is so much more than when we entered a couple days later, confirming that the real move was going to be down. Now, we lost out on about $2 worth of move on this trade, and that's okay. All right, we were totally right. We just got in at the wrong time, and it was because of the volume, and that's okay. So that's what you need to take away from this particular trade recap here, is that if you're going to be trading a trend, make sure that your volume confirms that the trend is moving in the direction of that trend, because it could very quickly, immediately reverse. And if you look at any of Mark Minervini's books, any trading book out there, they're going to say, you know what, if you're trading a trend, look to the volume to confirm that. And that's where I failed in this trade. And that's why it reversed on me, because I didn't look to the volume. And then, a couple days later, if I had looked to the volume, it would have confirmed, hey, it is going down. That would have been a much better entry than what we had here. But that's okay, because I defined my risk and I was in and out of the trade within a couple of hours. I didn't lose any more money than I had already anticipated on losing. And that's another key here too, right? Is, you know what? If I'm going to lose, let's call it 30 cents per contract in a trade, that's okay with me, because I know that's just a tiny portion of my portfolio. I'm not stressing about it. I'm not losing sleep over it, because I already have my stop in the market. I don't have to worry about it. The only thing that I do with stops is I move them down, or I should say I move them in the direction that the trade is going if it's working in my favor. Otherwise, I just let the stop hang out there. So pretty easy trade management. And that's what happened here. I had an easy trade management and it was closed and we moved on. So no big deal. It was a loser, but it could have been a lot better and also could have been a lot worse. But the key here is to confirm it with volume. That way you don't have a reversal in your hands like I had here.
Hey, thank you so much for listening. And before you go, remember to head on over to finclub.ai to get your 2 free weeks of artificial intelligence stock picks. You've got nothing to lose and only the most advanced AI to help you trade with confidence at finclub.ai. That's finclub.ai.
10MinuteStockTrader.com content is for information and educational purposes only. It is not, nor is it intended to be, trading or investment advice or recommendation that any security, futures contract, options contract, transaction, or other financial instrument or strategy is suitable for any person. Trading securities can involve high risk and the potential for total loss of any funds invested. 10MinuteStockTrader.com and Christopher Uhl, through its content, financial programming, or otherwise, does not provide investment or financial advice or make investment recommendations. Investment information provided may not be suitable for all investors and is provided without respect to the individual investors and audience's financial sophistication, financial situation, investing time horizon, or risk tolerance. 10MinuteStockTrader.com and Christopher Uhl are not in the business of trading securities trades, nor does it direct client commodity accounts or give commodity trading advice tailored to any particular client situation or investment objectives. 10MinuteStockTrader.com and Christopher Uhl are not licensed financial advisors, registered investment advisors, or registered broker-dealers. Stocks, options, futures options, and other financial instruments not included here involve risk and are not suitable for all investors. You alone are responsible for making your investment and financial trading decisions, and for evaluating the merits and risks associated with the use of any financial security and broker platform. For more information, please visit 10MinuteStockTrader.com/legal. And thanks for stopping by.